A company that spent 5 years and $62 billion buying Bitcoin just gave itself permission to sell it. You're watching Coin Crusader, and this single filing might explain more about where XRP goes next than any chart pattern could. On the surface, it looks like routine corporate housekeeping, a financing overhaul, some new authority to buy back shares, nothing that should rattle the market. But read closer and the picture changes fast. Strategy: the company built almost entirely around Bitcoin accumulation, just restructured its financing model. It now has the ability to sell up to $1.25 billion of its Bitcoin holdings, not to buy more, to raise cash. That cash is earmarked for dividend payments and possible share buybacks. Two new repurchase programs were announced, up to $1 billion each for common and preferred shares. On paper, that sent the stock up 5%. But here's where things start getting interesting. The reason a company buys back its own shares is usually because the market has undervalued them relative to what the company actually holds. And that's exactly what happened here. For months, Strategy stock traded at a premium to the value of its Bitcoin. Investors were essentially betting the company was worth more than its coins alone. That premium disappeared. The stock dropped below the value of its holdings, something the company clearly did not want the market to notice for long. That raises an entirely different question. Why prepare a defense against a shrinking premium unless you expect it to keep shrinking? A reserve of $2.55 billion sounds reassuring, until you remember the stock is already down roughly 80% over the past year, even after a 12% dividend increase. Then another detail appeared, and this one matters more than it seems. The company sold a small batch of Bitcoin, its first sale since 2022. Only a fraction of a coin's worth in dollar terms, but the signal is the point. A company that has never sold now has legal cover to sell over $1 billion more. To understand why this matters for XRP, you have to zoom out to how Bitcoin behaves when its largest institutional buyer stops buying. Michael Saylor himself said, back in an article from May of this year, that without his company's 5-year, $62 billion buying campaign, Bitcoin would likely be trading somewhere between $40,000 and $50,000. That's not a critic's opinion. That's the company's own founder describing what the price floor looks like without them. And right now, they are not buying. They're preparing to sell. Since the announcement, Bitcoin has already fallen from around $74,000 to the high 50,000s, a drop of roughly 20%. If the selling accelerates and each new sale gets its own headline, the psychological effect compounds. Traders don't need the full $1 billion sold at once. They just need to see the trend and start front-running it. And this is the part most people are missing. When crypto's biggest whale becomes a net seller instead of a net buyer, that pressure rarely stays contained to one asset. Altcoins, including XRP, tend to move with Bitcoin's broader momentum far more than most holders like to admit. So where does that leave XRP specifically? The chart tells its own version of the same uncertain story. After a sharp sell-off and a retest of the 50 EMA, price carved out a new lower low and has spent recent days consolidating in a tight range. The pattern has been choppy. Price wicks down, recovers, wicks down again, recovers again, each low slightly deeper than the last. That's not necessarily a bearish signal on its own, but it does show a market that hasn't decided which direction it wants to commit to. Right now, price is holding just above the 5 EMA, a short-term signal worth watching. A confirmed close above that level, followed by a push toward the next resistance zone, would shift the tone meaningfully. Lose it again and the door reopens toward the recent lows, possibly lower. There's a cyclical pattern worth noting too. XRP has retested its 50 EMA roughly once a month for the past 2 cycles, mid-May, then mid-June. If that rhythm holds, a similar retest could land sometime around the second week of July. But that's only one part of the story. There's a legislative piece hanging over all of this that could matter just as much as any chart level. The Clarity Act, the crypto market structure bill that holders have been counting on for regulatory certainty, has seen its odds of passing this year slide down to around 39%. That number keeps falling, and the reason isn't really about the bill's substance anymore. It's become entangled in questions about the administration's own crypto-related earnings, reportedly close to $1 billion over the past year, and the ethics debate that's followed. What should have been a straightforward bipartisan piece of market infrastructure legislation has turned into a political football. At this point, a lame duck session later in the year looks like the more realistic path to passage, rather than anything happening in the coming weeks. That timeline lines up uncomfortably well with expectations of continued downward pressure into October before any broader reversal takes shape. None of this means panic is warranted. Markets absorb selling pressure all the time, and institutions have weathered bigger shocks than a single company adjusting its balance sheet. But ignoring the signal entirely would be a mistake too. The real story may not be the sale itself, or even the size of it. The real story is whether one company's decision to finally start selling marks the beginning of a longer shift, one that could shape XRP's next move far more than any single headline suggests.